Cool. So I've hit the record button. I'm just sharing my screen with you, and then we will begin. Okay, so I hope some of you actually took the time to actually go through the papers yourselves, because that's when our engagement or discussion is going to be all the more fulfilling for you, particularly. But if not, I'm just glad that you are actually with us, because even that should, on some level, add value. Okay, so what we are doing today is we are doing question paper 2018. Why is it now popping up all these funny things? Okay, cool. Right. So 2018, I want us to start with question 3. Okay. I want us to start with question 3. So let's actually just zoom in there. Okay. And so, right. I want us to go to the required there. Okay. Now on the first bit, okay, let me just do this. On the first bit, I hope you guys you downloaded the past papers. It'll also make it easier for you to follow. Okay, so maybe as I'm going through stuff, you'll be able to also know exactly, refer back to information as we're actually dealing with it. So in question 3, under the required, it says calculate the change in members' percentage interest at 31 October 2018. Okay, let's flip the page. And then it also says complete the missing amount in the table for change in members' funds at 31 December 2018 in your answer booklet. Show your calculations. Okay, I want us to just park the bus there for a second, because I want us to actually have a look at, okay, let's do this, to have a look at what is actually in the text answer book for 2018. So I also shared this with you guys. So if you look there, your question 3.2, that's what they've given you in the answer book. So they want you to fill in these spaces. Okay, retained earnings, revaluation reserve, so forth, so forth. Okay, right. Anyway, let's now 3.3, it says calculate the value of the member's net investment at 31 December 2018. Okay, so now we know what we need to do. Let's actually get back into the details of the question. Okay, so this is pretty much a CC question. And guys, you're likely to get this. Why? Because remember, there was no CC question in your assignment, obviously, because that was units 1 and 2. There was no CC question in your test, because that was units 1 until I think 4. Yes, I think it was 1 until 4. Okay, so this is very, very likely to come. I wouldn't imagine, I'd be surprised if they don't ask you this. Okay, and there you can see it's a whole 35 marks. So anyway, here it says Bandana CC was registered on 1 January 2015. Okay, the founding statement of the closed corporation includes the following information: names of members, their interests and contributions. Okay, so member M, 70% interest, all right, or ownership, all right, and then 300,000 contribution, right? K, 30% interest and 80,000 contribution. Okay, happiness there. So that's what we're starting out with. Then it says the accounting date, 31 December, the following abbreviated trial balance of the closed corporation was available 31 December 2017. Okay, we're doing for 2018. So this is the beginning details. All right, in our documents, we'll be using this as the beginning information. Okay, cool. So there's your membership contributions, retained earnings at the beginning of the period, mortgage bond, which we're not going to use. Then there's a loan to K there, land and buildings, the value there, bank, which we're not going to use. And then here we are, additional information. With regards to the 2018 financial year, the following information was available, okay? On 31 December 2018, M transferred 20% of his interest in the CC to K. Ah, okay, right. So remember, it says of his, okay, and here they've given you nominal value 42,000, okay, which they didn't need to do, okay. But anyway, so let's go on, and then M lent the CC 40,000 repayable on 31 December 2000, and this again is irrelevant because remember, this is 31 December 2019. We're dealing with 2018. Okay, on 31 December, the land and buildings were revalued 550,000. Okay, cool. Let's look quickly here. Land and buildings here is 480. Here it's 550. Okay, so already you can quickly calculate in your mind. That's a 70,000 increase in value. Okay, that needs to obviously be apportioned between the partners. Okay, all interest was paid and received promptly on 31 December. Okay, this is important for transactions between the CC and members. Then it says retained earnings for the year ended 31 December 2018 amounted to, so here they're actually giving us the amount of retained earnings. Okay, so we're going to deduct this from profits, okay, before distributing what is this, the profits to the what you call it, to the members in the business. Okay, right, but let's go on. It says the distribution of income is equal to 50% of undrawn profits at the end of the financial year. So can you see they didn't give us profits anyway, right? They didn't give us profits anyway, but they're saying the distribution of income is equal to 50% of undrawn profits at the end of the financial year. So we know that 50% is kept, 50% is given out. So profits, if we're distributing them, is going to be 230. Okay, right. So we've read our information. Now we can begin. Remember the first thing they asked? Calculate the change in members' percentage interest at 31 December 2018. So somebody tell me, this 20%, is it 20% of the CC or is it 20% of member M's actual interest in the business, which is 70%? Okay, so what I'm asking you before we even begin, yeah, that's what I'm looking for. In the chat, tell me, is it a 20%, a straight 20% of the CC, right? Or is it B, 20% of member M's interest in the business, which would then be, so 20% is the same as 0.20 times, where is this? Okay, just use X, times 70%. What are we going to do, guys? So Muzamil says it is B, 20% of the 70% interest held by M. Anybody else? Does anybody else have some thoughts? Thank you, sir, for that. Shakira says B as well. Can I get a third one? Can I get a third one? And then we will proceed. So we've got 2B so far. Anybody else? Just looking for one more answer. Aha. So thank you, Kosi. Yes. So all three of you are correct. It is 20% of the 70%. Remember, the question says, now where's that question? I have too many things open here. Right. it says, if you look here at point 1, it says M transferred 20% of his interest in the CC to K. Okay, so thank you very much for that. Let's now get going and transfer that over. So let's go up. So I've also just filled in the answers here for you guys because of time. We obviously won't be able to get through a whole exam in just 2 sessions. So it really is revision. Okay, so you guys we're discussing, and this is why it's so important for you guys. Come with your questions. Come with your questions, and then we can obviously explain what was the logic here. So here isn't the interest before transfer, 70%, okay, and 30%, okay. Then we said, okay, I can actually just do this. I wrote it out, but basically what I put in the chat there is 0.20 times your 70%. And that's when you get your 14%, okay, which you can see internal transfer, 14%, where isn't this going over to K? So there you go. And those are your new interests or ownership of the business. So that's the first part. Right, then we move to the second bit. Okay, now the second bit wasn't like your typical change in members funds. Okay, let me just zoom out here a little bit. Okay, so now it's the change in members funds. Remember, since this is a transfer, right, we need to change your members' contributions, we need to change retained earnings, and because we had a revaluation reserve, we also need to change that. Okay, right, this I'm sure we haven't seen before, so it was really good that we revised this paper. Okay, so here pretty much all that we're doing isn't this was the initial. Let me highlight here quickly. Okay, so here this is the initial. M had 300,000, K had 80,000. Retained earnings, the initial. We know that it was 230,000. Okay, so we know 70% of that is then giving us this 100. So you guys are calculating this. Let me show you. Because in your answer booklet, this is what you have. Can you see? All they gave us was a contribution. The rest of the stuff you have to fill in. Okay, right. So here they actually made your lives easier because they actually, by the fact that they actually put it out there, kind of lets you know, okay, I need to do something for retained earnings. I need to do something for the revalued reserve. But actually, you should know this. They could have just given you this, and the total, all right, MK and the total, and left this blank, and you should have been able to do what needed to be done. Okay, but I guess they decided to be gracious. Anyway, all right. Is there a question? Did someone post something in the chat? What am I hearing? Students, hey students. I see what you did there, Muzamil. I see what you did. All right, cool. So let's proceed. So we break it down on that basis. Okay, how much did M have in terms of revaluation on the property, in terms of retained earnings before any transfers? Okay, so we've done that. Okay, and then we move on to say, okay, now how much is he transferring over? Remember, we said M is giving 20% of his interest in the business. So we can simply then say 20% of his contribution then gives us 60,000. That 60,000 is going to, his members' contribution is going to decrease by 60,000, and K's members' contribution is going to increase by 60,000. Okay, we do the same thing for these other elements as well. Okay, did I duplicate this? It seems like I did. Okay, it seems like I duplicated this. I didn't need to do this twice. Oh, you don't need to do this twice. So let me actually just do this. There we go. Okay, so I explained the members' retained earnings. We do the same thing. 20% of what M holds in retained earnings is then going to give you that 32,200. Okay, and then obviously that's going over to K. All right, and here I didn't do the totals. Well, actually, this is zero because negative 60,000, positive 60,000, zero. Okay, same principle here. Negative 32,200, positive 32,200, zero. Okay, but I'd advise put a dash there or a 0, just so your marker knows, hey, Mara, this student knows their story. You know what they're doing, okay? So that's just a good look for you, but it's not going to, change anything really, okay? But anyway, so that there is then obviously here you just total new funds at the bottom of the table there, and then you are home and dry. And let's see how many marks was that. Just that. Just that. Okay? Let's see. 22 marks, guys. 22 marks. Okay. Right. So make sure you're comfortable with that. Here they didn't even ask us to do the statement of net interest, what. This was just, change in funds. These are the exercises we did in introducing this topic. But anyway, let's move on to the last and final bit. All right. So they say calculate the values of members' net investment. Here, I think they were actually supposed to say calculate the values. Okay. No, it is actually fine. But I think they actually should have gone with saying calculate transactions with members, is what I think they were meant to say when I look at the structure of what they actually were asking. So if you look here, this is your answer booklet. So if you're writing this exam, this is what you're going to do. So here you've got M, okay, can you see here? You've got loan to members, you've got loans from members, you've got members net investment. Okay, right. So let's go back to our answers. Just want to quickly see something before I go any further. I'll come back just now. That is it unit 5 or unit 6? CCs. Okay, CCs is unit 6. Let's see. Looking for exercise 6.3. Yes. I hear something going off in the chat. I'll be with you now. Just want to see something. Let's do this. Okay, all right. So here, can you see transfers with members? Okay, so you've got interest paid, interest received, salaries. Okay, all right, cool. So here, in such a question, you would pretty much need to be guided by the blocks that they provided for you. Okay, let me quickly see what somebody is saying here in the chat. Sir, are we going to have the memo made available to us? No. No, you won't. These are my suggested answers. They're not the memo. They're not the memo. But yeah, if you actually look on in your more resources, I can actually go there now just to show you. I have actually uploaded my suggested answers. So where is that? More resources. And if you go to your past papers, so here you will see, so yes, here. Past practice questions and suggested answers. So wherever you see in suggested answers, there you go. That's pretty much, oh, sorry, down here. Past papers, these are exams. Right, so then the suggested answers is what I think would be the answers and where I think the marks may be. But again, it's suggested answers, they're not memos. So you download those, and they're different from the papers that we are revising. So you should be good. All right. Anyway, cool. I hope that answers your question, Kosi. Right. So then question 3, there you can see members' interest. You're putting back that what we calculated here, the new funds. All right. All right. So there you throw in the 480,272. You have your total there, and then obviously here, you would gather this information from the question itself. So if we go back to the question, you'll see there. Let me go back to the question so you guys can see what I'm talking about. So if you go there, isn't first bit there, we're looking at first bit there, it's loan to members. Okay, so we go and we say, did we have any loans to members? So we had a loan to K, all right, from the table they gave us, all right, the abbreviated trial balance. And in the information, did we make any other loans to members? Nope, there were no other loans to members. Okay, cool. So we then come here and we say, okay, no problem. Let's plug in that loan to members, negative 10,000 over there. All right, and then obviously we plug in that negative 10,000 in the totals. Then, did we have a loan from member? Again, if you look under the additional information this time, sorry, loan from member, yes, we had here M lent the CC Corporation 40,000 repayable. Again, I told you this information is not relevant to us because guess what? We are not doing the year, the financial year that ends in 2019. Okay, so anyway, we jot down that we obviously got a loan from partner or member M. Okay, and there we go, 40,000 there, and we have our total 40,000 there, and obviously then we have our members net investment, all right, where we're just adding that, all right, and subtracting that, and then obviously having the total over there. Again, here there were 7 marks on this question. A whole 7 marks, guys. A whole 7 marks just for that. Okay. Right. Are there any other questions or thoughts? We've just finished. Okay, awesome. Glad to hear it. Glad to hear it. We've just finished question 3. Okay. So now we're going on to question 4, but before I do, I heard something there in the chat. Oh, good for now. Okay, awesome stuff, Shakir. Glad to hear it. So let's go to question 3. Question 3. So question 4, sorry, not question 3. Question 4, they are saying what? Okay, so here under the required, they say open, post, to and balance the following account in the general ledger. All right, I'm not going to try and read that name. For the year ended 30 June 2018. They want the appropriation account, all right, and the current account, okay, for one member, one partner. In this case, now we're dealing with partnerships, all right. Again, did you have partnerships in your exam? I mean, your test? Or in your assignment? No. So you're bound to get some question. And can you see here? This is 60 marks, guys. Can you imagine? Look at that. Right? 65 marks. Okay, guys, when you're doing your practice past exams, look at the mark allocation. It will show you how well you need to know certain sections of your accounting. Okay, so here, don't mess around. This is coming, guys, right? Because they didn't test it anywhere else. Okay, but anyway, let's continue. Then it says for 4.2, complete the missing amounts in the statement of changes in equity for these partners for the year ended 30 June 2018 in your answer book. Okay, so let's look at the answer book and see the structure that they've provided for us. Okay, so there we have the appropriation account. All right, cool, no problem there. And then we have the current account, cool, no problem there. And then we have the statement of changes in equity for a partnership. Can you see there? Current account, we have both partners. Capital account, we have both partners. And then we have the appropriation, and then we have the total. Okay, cool. Anyway, that's cool. Nothing too hectic there. Let's get into it. Cool. So we know now what we need to do. Now we get into the question. And I'm sure by now you guys now realize, especially since we did what's this 1A together, you're now realizing the value of reading the required first before actually going into the question. and seeing what information they have for you there. So please continue to practice that. The following information was taken from the books, all right? Cool. Balance in the general ledger, okay, at the financial year end 30 June 2008. So we got the capital 1 July 2007, all right, for both partners. Remember, we're doing this for 30 June 2018. So again, these are the opening balances, all right? Then we have the current account, then we have drawings that they made, okay, for 30 June, okay, no problem there. And then we have the profit on 30 June, all right? And then we have property, plant, and equipment, cool, no problem. Now we have the additional information. And if you guys have been practicing this section, you know that this is going to guide you as to what adjustments need to be made, okay? So first one, interest on capital must be appropriated at 8% per annum, all right? Capital account balances remain constant. Okay, so 8% of the capital balances. Okay, and I've just done us the favor, because we are obviously pressed for time. If you look down here, you'll see I've actually just interest on capital. So we took that 400,000 times 8%. You guys can begin to calculate this in the chat, just so you don't get bored of me talking. Okay. But I'll continue to read in the meantime the question. So that's the first thing that we need to do. Interest on drawings must be appropriated at 9% per annum. Drawings were made 6 months prior to the end of the financial year. So immediately you should be knowing, okay, cool, I need to appropriate or apportion, right, my calculation on drawing. So it'll be 9%, for example, of 22,000 times 6/12. Okay. Then we have interest on current accounts must be appropriated at 10% per annum on opening balance. Okay, sharp, no problem. Interest on current accounts, 10% on their opening balance. So we go there, 10% of partner V, 80,000. Can you see he's got a credit balance? So that's a good thing, because remember, capital accounts are like, current accounts are like capital accounts. We want a credit balance. Okay, that's a positive thing. However, partner H has 50,000 on the debit side, which is a bad thing. Okay, right. So we're going to penalize partner H and obviously reward partner V. Okay, anyway, let's go on. Then Human must receive an annual bonus at the end of the financial year of 20% of her annual salary. Okay. They haven't given us the annual salary, but that's fine. Let's continue to see if we do get that. Okay. Oh, actually, sorry, I skipped one. Both partners must receive an annual salary at the end of the financial year. V, 255,000, and H, 195,000. Okay, so they did give us that. Okay. Usually they'd actually give you that in the table if you've been practicing the questions. But hey, like I told you, we'll never do it the way you've seen it in your textbook all the way through, because we want to challenge you and see if you know your story. So literally for the bonus there, you're just saying 20% of 195,000, and there you go, you got your bonus. Okay, then the remaining profits must be split between the partners V and H using the ratio 3:2. So guys, this is 65 marks for free. In all honesty, it's, if you've gone through the videos, you've been practicing the assignments, you've been practicing the questions out of your textbook, you should be okay over there. So let's quickly calculate. Who has capital for me? Okay, all right. So I'm just going to do this on my calculator here. But anyway, you're seeing what I'm doing, so that should be fine. And it's not rocket science, so you should be fine as well. So 32,000 over there, and then over here we have 380,000 times 0.08, and you have 30,400. Okay, guys, again, remember we're doing revision, and I've tried to kind of just include everything here. So here, I didn't want to put the actual addition of these two in brackets here because it would be messy, but that's how we're getting that 62,400. Okay, then we go to interest on drawings. Okay, so 22,000 times 0.5, that's the 6/10, times then your 0.09, the 9%. Here I get 990. Okay, 0.5 times 28 times 0.09, and here I'm getting 1,260. Awesome stuff. I add those two together and I get 2,250. So there's that interest on drawings. Can you see here? Remember, the appropriation account is like an income account. Can you see here? It's got N, all right? Profits, credit, because that's money coming in the business, all right? Here we're penalizing our partners, so that's money coming in the business. So that 2,250, we're plugging it in this side. Okay, happiness, right? Then we go to interest on current account. Remember, we said that V had a, I'm just going to do this here, credit balance, all right? And H had a debit balance, okay? Right. So 10% of that, oh, that's 8,000. And 10% of that is then obviously 5,000. All right, perfect. Cool. Let's see what the time is. Okay, we still got time. Right. So interest on capital. So since we've got a difference, this is actually, you could even just do this. So then we say which one is greater. We're going to be rewarding more than we are penalizing. So there'll be more money leaving us than coming in. Does that make sense? This is money leaving us. Okay. I'm going to just put that in green. Actually, let me put it in red because I think that works well. And then this is money coming in green. I think this one would be better off in green. Okay, so here, when we say interest on current account, let me do this in brackets so you guys can see how it would typically look. You would be saying the 8,000 minus the 5,000. And then obviously here you will have 2,000. 3,000 actually. Sorry. All right. Everybody happy so far? We're together? Okay. All right. Okay, cool. So then the bonus. So here, for some reason, I had read that both partners, I don't know, maybe it was late at night, I don't know, but clearly I read wrong. So literally, we're just saying 20% of H's salary. So okay, and that gives you 39,000. 39,000. Okay, cool. So let's copy and paste this. So bonus to partner should be actually partner since it's only one. Okay, 39,000. Happiness over there. Okay, let's proceed. So actually there's also then salaries to part. Okay, that I had left inside. Okay, that's fine. Then what else? Is there anything else that we have not yet dealt with? Let's see. Okay, so it's only the profits that are remaining that we need to then calculate. Okay, so we've dealt with all the necessary adjustments that needed to take place. We obviously have already plugged in our profit that needs to be that we had before any adjustments. So let's then calculate how much we are distributing between partners. Okay, so then we say that 500 minus okay, let's say plus first. Remember, this is money coming into the business, so anything we have on the credit side, we're saying plus 2,250. Okay, and then minus 3,000, and then minus 62,400, and then minus what else? 255,000 minus one. Did I write that down? No, I didn't. 95,000, and then finally minus 39,000. And somebody, please, can you have the answer to how much we have in profit for me there? How much are we sharing between these two partners, two money makers? How much, how much, how much, how much? Talk to me. Talk to me, ladies and gentlemen. How much do we have to share between these two partners? I don't hear the chat going off. What do we have? Guys, this is a simple plus minus job. Somebody help me. Help, sir. Help you. Okay, so thank you, Vika. You have 1,657,000, sorry, 1,657,550. Okay, is there anybody to second it? I've literally not calculated this amount, so I'm trusting her. So please, let's verify. Let someone share something. What's the matter? What's the matter, Muzamil? Okay. All right. Kamukhelo says it's 1,000. Zuma numbers. Hey, you know, I was thinking it, but I was like, hey, maybe there are some ANC supporters. Let me not say such things. Like I'm behaving like that man. So I'm glad you are listening, though. You're clearly paying attention, Muzamil. So thank you for that. So I have two numbers here, guys. Let's verify. What's the correct one? Muzamil, can you give us the right numbers there? Instead of just making jokes about your lecture on a recorded lecture. Can you imagine? Hey, the students we have. Thank you, Tino. All right, so I've got 1,425,350. Okay, can I run with that? Okay, awesome stuff. All right, cool. So I'm just gonna run with that. All right, but thank you all for your contributions. Appreciate it. Cool. Right. So there we are. So now we know we need to split this between the two partners in the ratio 3:2. 3:2. Cool. So here we're going to obviously then say 3. Put it in brackets. And then times 3 divided by 5. Okay. And I'm just going to copy and paste this whole thing. Put this one here. And then say 2 divided by 5. All right. Awesome stuff. And somebody give me how much we're paying over. Can you see again the profits that we're sharing to the current account? Remember what we said? Capital account is only used for capital contributions. All right, but otherwise we use the current account to reward and penalize partners. Okay, so somebody tell me what portion of this profit that we have is going to partner V and how much is going to partner H? Talk to me. Okay, I think I heard something going off in the chat. Thank you very much. Thank you, Kamuhelo. Appreciate that. Okay, and that looks very much correct when looking at my suggested answers. Ooh, I forgot to actually make a copy of this. Okay, let me just quickly do that now. All right, cool. All right, let's proceed. All right, so are there any questions here? We've literally finished now the appropriation account. Okay, can you see that? Remember what I told you, the purpose of the appropriation account is to distribute profits. Okay. Wouldn't H have 570? Ooh, that is a good question. Did we have any retained earnings? Let's just see. I got literally the same thing. Yeah, actually, even if you just look at it from a perspective of minusing 855. So let's do it together. So quickly, I think. Okay. I think you have something there, Muzamil. Ish, Mara. I want the. Okay, this is what I need to do. Then. Okay, fine. So let's do this. 1425350 minus 855210. I think yes. So 570. Thank you. That is correct. 570 140. Okay, right. So remember I told you the appropriation account is for distributing profits between the partners, profits or losses. So there you can see, again, we didn't have any retained earnings. If we had retained earnings, let me quickly just show you this. So insert, okay, it's gonna insert double, so let me do this. Just showing you this so if you guys come across it, you know what to do. So here you would have retained earnings. All right. And then you would obviously then, whatever, they could give you a percentage to say 50% of profits is held back as retained earnings or unpaid profits or undrawn profits. And then you'd calculate that. After you have that, you would then deduct whatever amount that is. So here you'd say minus the retained earnings. And then you'd obviously have a smaller profit to distribute between the partners. And you would proceed with the same thing that we did. Okay. So I'm just showing you, if you have that, you know exactly what to do if you have retained earnings in your question. But that said, I think let's park it here. I don't know if there are any questions on what we've covered thus far. But if so, please just drop them in the chat. And then as soon as we get back, we will proceed. We will proceed with our question paper. All right, ladies and gentlemen, I'll see you guys at 11. Yes, at 11.